Good evening, everyone. Thank you so much for joining on this another monthly webinar for ours. We wrote a very interesting newsletter earlier this month on Uttar Pradesh, the rise of the phoenix, and we'll take you few of our thoughts on that topic in this webinar. We'll begin the presentation by sharing the performance of all our portfolios, as well as which were the major contributors or draggers in the portfolio in the month of April, as well as on a one-year basis. Then we'll take you through our thoughts on Uttar Pradesh, why we believe that it's a great story in making. And then Trilok will conclude with a few slides on macros as the repeated format of our webinar every month. Post that, we'll conduct a question answer session. So kindly put your questions on chat box at any point of time, and we'll try to answer almost every question which we get. If there are more questions in pipeline which we are not able to answer due to paucity of time, we'll definitely reply to you on mail or have one-on-one sessions with you guys. Bhargav, please start the presentation.
Yeah, sure. Thanks, Vishant. We'll start with the portfolio performance. Thankfully, April has been a very good month across all the portfolios. Coffee Can, Good and Clean, Emerging Giants, 10X, all the four portfolios have sort of very well in the month of April. So if we talk about Coffee Can, and if we look at the April month returns, it was up about 3.8% versus 1.2% return by the Nifty. So the alpha has been fairly decent at about 2.6%. If you look at from the stocks which have done well in the month of April, KFIN was a star performer. It was up almost 22% in April, followed by Container Corp, which was up 16%, and Eicher, which was up about 15%. If you look at these three names, these were the new additions which were done by Siddharth Bothra, who was in the month of December. So essentially, these new stocks have been performing very well. And most of them have sort of seen very good alpha generation since the month of January as well. If you look at from a bottom performance in the month of April, Tuck was one of them at about 9%. You must be aware that there were RBI restrictions which were imposed on Kotak, and that led to drag in terms of the stock price. Obviously, discuss in detail during the Q&A session if anyone has any specific doubts on Kotak. The other two draggers were HDFC Life, which was down 8%, and Titan, which was down about 5%. If you move on to Good and Clean, so Good and Clean for the month has given a fantastic return of about 8%. If you were to compare it with the benchmark, which is BSE 500, it was up about 3%. So the alpha in the month of April has been sort of impressive at more than 5%, more than 4%. If you were to know the in Good and Clean, it was Aegis Logistic. It was up almost 53% in the month of April. So it was a great discovery by Trilok. He added this April itself, and most of the upside has been captured by us in the month of April itself, given that it was added in the start of the month. The second stock which did very well was CDSL, which was up almost 23%. And the third stock which did well was Supreme, which was up 19%. So Supreme reported extremely strong results, and that led to a significant outperformance by Supreme. we were to talk about draggers, obviously IT has been one of the draggers as far as the month of April is concerned, and hence persistent, which is in the IT sector that also did not do well, was down by about 15% in the month of April. PI was down by about 6%. So if you look at the overall chemical sector as such, that has not been in flavor. And if you were to look at the relative comparison of PI versus the chemical space, then obviously PI has done much better. TVS was also one of them, 4%. Talk about emerging giants, that fund also came back fairly strongly in the month of April. So it was up by about 7.7%. And if you were to compare it with the benchmark, then again, that has been north of 4% in the month of April. The top performer for emerging giants was Neogen, which was up almost 29%. And again, the results have been above consensus, and that led to a significant re-rating in the stock. That is one trend which we are seeing during this quarter, that companies which are reporting better than expected numbers have been rewarded disproportionately. And that's why we believe that going forward, your should be rewarded handsomely. So that's the change in trend that we are seeing in this result season. Unlike in the last three result seasons, where beat in terms of numbers was not rewarded disproportionately, but this time around, the beat in numbers has been rewarded disproportionately. And what it signifies is that the market is becoming more polarized towards performers versus laggards. So clearly, as more and more companies in the portfolio start reporting beat in terms of numbers, we should possibly see this kind of trend continuing for all the portfolios in Ambit. The second company which did well was Safari during the month of April, which was up 3%, and Teamlease, which was up about 20%. So Teamlease has been the company which we've added recently, and we'll obviously get into more details as we get into the Q&A. Garware Technical Fibers was one of the draggers at about -3%, but the other two draggers thankfully were not negative in terms of returns, but obviously the increase in the share price was just about 1% compared to benchmark, and hence we've listed that in terms of draggers. If you come to 10x in terms of performance, that also did fairly well with 4.5% return in the month of April versus 3.4 for BSE 500. We've added Aegis in 10x as well. So both Wood and Clean and 10x got the benefit of Aegis. Safari, again, part of both EG and 10x, also did very well, and GMM Pfaudler, which was up about 15% in the month of April. The draggers were persistent, which we've already discussed, followed by Go Fashion. Again, a lot of retail companies haven't reported impressive numbers. Fashion also did not do well, followed by Metro, which again is a retailer, which was down about 7%. If we come to the topic of this month, which we wrote in the newsletter, so I'll just give you an interesting story behind why we thought of writing on Uttar Pradesh. So in the last couple of months, we've been meeting several companies and also talking to channel partners, which includes dealers, distributors, competitors, etc. In North India. And when we were speaking with a few of them in the state of Uttar Pradesh, what we understood is that clearly the fortunes of the state are about to change. And the main reason behind that is essentially the cleanup of the mafia that we've seen in the state. So historically, the state, obviously everybody knows, was known as a Bimaru state. But a lot of things have essentially changed in the state by the sitting government. which was elected in 2016. So clearly, since then, there has been a significant cleanup as far as the mafia is concerned, and what that has resulted is significant investments into the state. So if you look at this particular slide, I think everybody is aware that historically the state of UP was not in the best of shapes. In fact, very few people would know that the per capita income of UP in 2022 was actually lower than that of Pakistan. So as such, Pakistan's image is actually not as great as compared to UP, but the fact of the matter is that Pakistan's per capita income is far ahead of that of UP in 2022. And why we are comparing both of these places is that the population size of both UP and Pakistan is very similar at about close to 24 odd crores. So to that extent, in terms of population, they are fairly comparable. But the fact of the matter is that the per capita income was so low that it was close to 50% lower compared to Pakistan. So very poor state of affairs as far as UP is concerned. And one of the main reasons for that has been widespread poverty in the state. So if you look at the polarization of income in UP, it has been extremely acute. And the main reason for that is the concentration of power in very few people's hands. Obviously, you would have seen several movies as well as a web series. So if I were to name a few, Bandit Queen is a movie which I would recommend everyone to see the state of affairs in UP. Another good movie is close to Wasaipur. That is also another good movie which state of the Hindi belt in North India. And Mirzapur, which is one of the great web series, one can actually, I would recommend to see that in order to understand the fear of mafia which was there in the state of UP. So it was a state which was completely ignored, and it was sort of a, if I can call as the opposite of an oasis in India. So whilst the country was shining, but the state was completely sort of so what has changed? I mean, if we move on to the next slide, several things have actually changed. So starting with the cleanup. So as I highlighted earlier, that came into the state, what we saw is a lot of cleanup being done. So the state was as such very terrorizing, and what he did was that he sort of attacked mafia left, right, and center. In fact, he was very well known as the bulldozer Baba of the state, because what he was doing is that he was just destroying the properties which were unofficially occupied by the mafia community in the state of UP. In fact, he became so popular that people during the festival of Holi used to sort of have pichkaris in the form of bulldozer and use them to celebrate festivals. So clearly, there was a significant cleanup being done. And if you interact with people in that state, what we now see is that people are now seeing that state as a very safe state. In fact, if you talk to a lot of women population in UP, what we understand is that going out of the home after 8 p.m. alone was considered as a risk in tier 2, tier 3 cities in UP, but no longer that is the case. In fact, there is mobile vans which now circulate all over the state in the night, which makes the in the gender very, very safe to roam around. So the state has seen a significant change. In fact, if you were to look at the road infrastructure as well, there's a lot of development which has happened. So I remember if we were to land in Lucknow and go to Kanpur, it used to take 3.5 hours. But now, thankfully, on account of the expressway, you take just about 40-45 minutes. So what happens is that as the road infrastructure and the safety is addressed, then the state sees a lot of development, and that is what we are now seeing. So if you look at this particular slide, clearly the state is now on the verge of becoming Saksham compared to Bimaru earlier. And why we say so is because of the various data points which we sort of learned as we were interacting with several people in the state of UP. So the expressway, the state government spending in terms of the roads and the bridges is 1.6x the kind of spending which happened in the past 10 years. So clearly there has been almost 60% increase in terms of spending as far as the road infrastructure is concerned. If we were to look at the kind of rail network, there are 9 metros which are scheduled to run in the state of UP, and of that, 2 of them are already fully operational. So clearly, the state is far ahead in terms of the metro infrastructure as far as comparison to other states is concerned. If you look at the power situation in the state of UP, there has been a significant improvement. So to talk to my relatives in UP about 7-8 years back, they used to tell us that power cuts were very common, and 10 to 12 hours power cuts during the month of summer is something which is fairly normal. Now things have changed significantly. The state from having a 10% power deficit that significantly reduced to about 1%. And the main reason for that has been a significant increase in terms of installed power capacity to about 30 gigawatt. And what has led that is essentially significant investments which have happened. In fact, on the transmission and distribution side also, there has been a lot of development which has happened. So Torrent Power, which is one of the companies which does distribution franchisee, has done a brilliant job as far as Kanpur is concerned. They have significantly curtailed the T&D losses in that particular state. So clearly what we are trying to highlight is the fact that UP is a state which is definitely at an inflection point. And clearly, you will see significant development coming into the state. Recently, if you look at the kind of acted during the Ayodhya incident, will also lead to a significant boost in terms of religious tourism. In fact, the government spent about close to 18 billion rupees in constructing the Ayodhya project, but expecting 250 billion worth of business to generate on the back of that spend. So if we look at several religious cities in the country, you don't see the kind of traffic in UP. Say if you look at the kind of traffic which we see in Tirupati, or maybe in Nathdwara, or maybe in Vaishnav Devi, you don't see similar kind of tourism traffic in the state of UP. But now that a lot of infrastructure has been developed in Ayodhya, if we look at Varanasi as well, the temple has been completely redone, and the state of the city has been changed significantly. I remember earlier going through a narrow lane to visit the temple, but now the entire transformation has happened. So clearly, there will be a significant boost in terms of religious tourism as well in the state. And why we say that UP is at an inflection point. So if you look at this particular slide, what we see is that UP is now where Gujarat was maybe about 15 years back. So what we understand is that once a state crosses $1,000 per capita, then the state goes through a significant inflection point. And why do we say so is because per capita income of 1,000 decent number as far as growth is concerned, because what happens is that once you cross that number, typically your spending power increases disproportionately. And when I say the spending power increases disproportionately, what I mean is that earlier the spending is typically on food items because obviously when your income is lower, you try to first address your essential needs. But once you sort of cross the $1,000 number, you start spending on non-food items as well. So if we look at the three small charts which we've pasted in this presentation, what you see is that the share of packaged foods and beverages increases disproportionately as the per capita crosses $1,000, because typically as a family you start spending on luxuries. If you look at share of durable goods, these charts are obviously at the India level and it is across time series, and what it shows is that as the country progresses, your share of packaged foods and beverages improve, your share of durable goods improve, your share of consumer services improve. So clearly there is a significant development which happens once the per capita crosses. And if you look at the top table, you can clearly see that the state of Gujarat has terms of GDP as compared to UP as well as India. So if you look at the last 20 years CAGR for Gujarat, it's almost 2 percentage points above UP. So whilst UP has grown at 8%, the state of Gujarat has grown at 10%, and India as a country has grown at about 9%. So clearly as the state goes to an inflection point, currently the GDP is close to about $1,100. We believe that in the next 6 years, you should see the GDP per capita doubling to about $2,200. And why we say so is that the reason for that is that several companies whom we meet are now looking at setting up factories in the state of Uttar Pradesh. And the main reason for that is the security. So earlier, they were very scared of investing money because they were fearing the fear of mafia. But now that the state has been cleaned up, you are seeing a significant investment. In fact, a big defense corridor is also being planned in the state of UP. And that is just one instance. But if you talk to companies across pipes, across steel, across electricals, several of them are now looking at setting up manufacturing operations in the state. And what will happen is that that will give a lot of employment generation opportunity for the locals. So clearly, you'll see reverse migration also happening. A lot of UP migrants who have been working across the country in states like Tamil Nadu, Karnataka, Maharashtra, Gujarat, which are the industrial states, will see reverse migration to UP. And that would mean that several companies in the state of UP will sort of benefit. So a few of our companies in our portfolio like Havells, like Teamlease, like V-Mart, could see a big beneficiary of this development which is happening in the state. And it's a large state, and when a large state goes through significant development, then also has after effects on the country as such. So as such, we are very bullish on the state, and obviously if anybody has specific questions, then we'll definitely address them in the Q&A. So I'll now hand over to Trilok for the macro and market update.
Yeah, Thank you, Bhargav. So I'll just quickly take you through to what's happening on the macro front. After we have heard what's happening on the ground in the UP state as a whole. So clearly, as we progressively move forward, there is absolutely certainty coming up with regards to the rate cuts. So obviously, as we began this particular calendar year, there was a significant consensus of rate cuts happening in the US, particularly by Federal Reserves. And now, as we are sitting at around the mid of the year, I mean, the market is expecting only 10% of the market is expecting a rate cut now versus 40% plus expected a rate cut. Now, the bigger challenge obviously is not about the only rate cut, but obviously the fact that US GDP as well as inflation continues to surprise positively, and the Fed is that why that's primarily the reason the decision has been delayed. Importantly, when you just look at from a broader perspective, India obviously in isolation has done a very credible job from a central banker point of view, but with the US interest rates at elevated levels at where we are, it becomes a relatively tougher ask in domestic market, even if the situation persists, sort of demands so. So this is the broadly the point we are trying to allude to, that the as we progressively move ahead, the rate, the longer, higher for longer will probably remain in the calendar year 24. Moving ahead from, interest rate cuts to what happening in the domestic market, as we see, GST continues to clock new records. The next slide, please. Yeah. So as you see, the GST collection and the indirect tax continues to clock new record. In fact, we surpassed 2 lakh crores of collection first time in the month of April. Now, it is very important to note that this particular growth has happened despite I would say benign or soft inflation in the last 6 to 9 months in particular. Also, when you notice the WPI is obviously is been in the range of less than 0.5% in the last 6 9 months. Interestingly, this particular GST collection is led by a lot of formulation across various sectors. Right on your screen, you can see the revenue, growth of a lot of unlisted, companies in a various sectors. For example, cap goods, apparels, beauty, jewelry. You have seen a lot of these names sort of outperforming the listed space, which obviously is a testament to the fact that formulation in the economy is happening at a faster pace, and which is why we as a country is looking at significant formalization of the tax paying businessmen, as well as the number of registered taxpayers continues to rise. So that's a very very good news from a broader economic point of view. Moving ahead from taxation to what's happening in the rural markets, because this has been a question in mind for most of us. And in fact, if you just look at urban versus rural market has continued to struggle over the last 3 years. In certain cases and in certain categories, rural has not even surpassed the pre-COVID levels. Thankfully, the silver lining is clearly visible. The employment has surged in the last 12 months, and also the unemployment has surged up, particularly because of a very very strong activity in the in construction, industrial and manufacturing area. Importantly, when you look at historically, it is also coincided with a population sort of going lower towards Manrega work, because usually Manrega is a platform where people sort of move towards when they don't have any alternative opportunities. The recent downfall in the Manrega work demand is also corroborating to a strong underlying employment in the rural areas. Importantly, also another aspect to note is wage inflation. Real wage inflation has actually started to be in a positive zone after like 2.5 years of negative territory, which means disposable income is rising, and that's again a good news from a rural market point of view. And lately, if you see, it is the recent Q4 numbers, most of the companies that have reported, it is probably been in the first quarter in last 7 to 8 quarters where rural market have outpaced the urban market in terms of volume growth, which is again an indication of things to come by. And which is why we have, in a lot of in the portfolios, we have taken some rural recovery bets as well. We can obviously discuss on that later. Moving ahead from what's going to be the outlook, because when you talk about rural, obviously agricultural is an important component of it, and we also need to keep an eye on what's happening on the monsoon and the rainfall. The good news is, after the El Nino impact, which we obviously saw last year, where we had a relatively subdued rainfall, and importantly, the spatial distribution was not so great. La Nina is obviously going to be the occurrence in this particular year for Southeast Asia Pacific region. Importantly, in La Nina years, usually not only we receive abundant rainfall as a country, but also when you look at the history, in the years of La Nina event, usually 70% of the time you will, India or the farmers tend to produce greater than 5% of production. So that's, again, a great news from a upcoming important event from the year, because if the monsoon is obviously strong and the disposable income rises up, obviously it adds further to the rural recovery theme that we intend to obviously look forward to. Moving ahead from monsoon to what's, where the markets are. So happy to share that even in this quarter, so far, if you look at the numbers, we are in the midst of the earnings season. A lot of these companies have reported the numbers. Importantly, heavyweights have reported a very strong growth in this particular quarter, and as rightfully auto and NBFCs are driving the growth in this particular quarter as well, thanks to margin expansion as well as strong earning credit growth cycle. Importantly, even because of this particular, I would say the divergence between one or two between one sector and the others, the aggregate growth continues to be double digit even in Q4, and we believe the earning growth in FY25 should be in the range of low teens to mid teens for larger companies, and probably mid teens to high teens for the mid and small cap companies. Notably, the despite the recent run up, the valuations for Nifty is still in line with long term average. Obviously, we have caught up, versus the discount that we were trading at 6 months ago, but certainly we are not meaningfully, over the long term averages. And there is obviously, with political stability coming up and growth sort of sustaining, we think valuations are not the only reason to get worried on. So with that, I will conclude this particular update on the macro session, and I will probably hand it over to